Hello, everyone. It's Lisa Patterson with Daniel Ravenel, Sotheby's International Realty in Charleston, South Carolina. I'm here again with Jennifer Flanagan from Case Law. And today we're going to talk about real estate tax and what happens when you buy a place in not just Charleston, but in South Carolina in general. I've said it 100 times. I'll say it again. Jennifer's the best closing attorney in town. I just love working with her. So Jennifer, thanks for taking the time to do this again.
Thank you.
So Jennifer, what I see a lot and people don't understand when they move to Charleston or South Carolina, in Charleston, they just assume that you're going to be a 6% real estate tax. 4% is for residential and you are a primary resident, and 6% if it's a second home. And there is a significant difference. It's about 3 times when you go 6%.
No, it's not 2%, it's 3 times.
Yeah. Yeah, it's 3 times. It's a big difference. I always show my clients, you can go online to Charleston County and you can look it up and look your tax district and put in and see exactly what your tax is going to be. Explain that first. And it's pretty easy to apply for that 4%. And the other thing that I see a lot, and you can talk a little bit on this, is couples will come and they'll buy a place in Charleston. Well, I'll just claim this as my primary resident and my husband or my wife will claim the other, and you cannot do that. They will catch you. You cannot do that. So explain a little bit about how you go about getting that 4%.
Okay, yeah. So thanks, Lisa. And you're right. So in South Carolina, it's very different than I would say most states. There are 2 different tax rates. As you mentioned, 4% and 6%. Those numbers are deceiving because, again, as you said, the 6% tax rate, which is reserved for non-primary homes. So that would be investment properties, second homes. That is really 3 times more than the 4% tax rate, which is reserved exclusively for primary residences. So in most states, you just get taxed at whatever you're going to get taxed at. It doesn't matter how you're occupying the house. But in South Carolina, it does. There's a huge difference. As we mentioned, it's about 3 times more, or really a little more than that, 3 times more taxes. So for instance, if your taxes were $1,000 for a primary residence, they would be a little over $3,000 for a non-primary second home or an investment property. And of course, the catch is, as you also mentioned, in South Carolina, the default is that 6% rate. So the default is if you move to South Carolina and you're living in a house as a primary residence and you move your stuff in and you're living there, but you don't notify anyone and you don't file the application, your tax bill will be that higher rate. That is the default. That is the assumption. So in order to qualify and to get that lower tax rate, you actually have to actively file an application with the tax assessor's office in the county in which the property is located in. And you can find those applications online. It's called the 4% primary residence application. So you can look it up for Charleston County, Dorchester, Berkeley, Beaufort, wherever your property is located. And what I always tell people when you print it out is to, once you have it filled out and gathered the information, which we'll go over that in a moment, but once you have all of that, I always advise people to physically walk it into the tax assessor's office, which may not be possible at the current time, but you do have the entire year to get it filed. And so once you move in and buy the property, and so I tell people to walk it in, because I found that the people at the assessor's office are generally quite helpful and will go through the application with you while you're standing there, go through the documentation, and let you know if anything is missing, if anything's being added. So I find that it's helpful to do that. And as far as the application itself, so the questions are pretty self-explanatory. It does ask you if, specific information about you, when you bought it. Are you married? Is the person who's married on title? And this is where it gets to your point about, you can't have 2 primary residences, because it specifically asks, does anyone in your household, does anyone claim another property as a primary residence? And if you answer yes to that question, that's pretty much a killer. You're not going to be able to qualify for the 4% residence if someone in your household has another primary home. And so, and that's defined on the application. So, I can always answer specific questions about that, what it means to be a member of the household. But you can't have that. And it also asks about rentals. So if you are renting a portion of your property, which does happen sometimes, you still can qualify for the primary residence exemption for the portion of the property you are occupying. And so they really look at square footage, what square footage is being rented out, and they'll do a calculation, and they'll calculate that portion as at the 6% rate, and the portion that that you're occupying as a primary residence at the primary residence rate. So all of those questions are in the application. They're going to require you to get updated documentation, driver's license, vehicle registration, voter registration card. They want a copy of your most recent state tax return. Typically, depending on the county, they may want a current copy of your utility bill. And once they have all of that, you'll include copies of all of that, and that's what you'll file with the assessor's office in your jurisdiction. And then it should take effect that year. So that year's taxes should reflect the 4%.
Yeah, it sounds like a lot, but it is pretty easy. And it's certainly in the amount of money that it saves you. And you mentioned the part that you're not occupying. For example, I have a lot of clients come to Charleston, they buy a property that has a detached carriage house or kitchen house in the back, and they decide they want to rent that. And that portion of the property would be considered at the 6%. So that's something I always advise clients.
That's right.
Another thing, and I see this happen all the time, you know, maybe I've met someone after they've purchased, they've been living here a little while. If you come into town and you purchase a property and it's not going to be your primary residence, you're going to be charged the 6% real estate tax. However, you elect to purchase a property that is already being charged the 6% real estate tax. There is a credit that you get for that, and it's ongoing. And a lot of people buy and don't realize and never apply for that.
Yeah, so that's right, and it's a 25% exemption. And what it does is, or when it applies, is when someone buys property that is taxed at the 6% rate and continues to occupy it that way. So if you buy a home that has been used as a second home, you are going to continue to use it as a second home. There is an exemption that you can apply for with the jurisdiction. This is done after closing, and I can certainly assist you with this. I typically will prepare the letter and collect the documents on behalf of my clients, and then I'll send it to them because it does need to come from the owner, property owner. But it's fairly simple. It's a letter that consists of a request to the county and a reference to the code section for this 25% exemption. You need to include a copy of the tax information showing that it was taxed at 6%, a statement that it will continue to be taxed at 6%, and a copy of the deed. So once we have all of that information, I send that out, I prepare the letter, send it out to the client, they send it in. And what it does is it gives them a 25% cut off of the base of the sales price or the assessed value, whichever is higher. And so their taxes would be taxed on 25% less. So for instance, if they are taxed at, if they buy $1 million property, and let's say it's assessed at, $950,000, the 25% will be taken off of the, and I think I made a mistake earlier. It's taken off whichever is higher. So I apologize if I made a mistake on that. It's going to be taken off whichever is higher, the contract sales price or the assessed value. Typically, that's going to be the sales price. So if it sells at $1 million, it's assessed for a little less than that. The 25% is going to come off of the $1 million. And so instead of being instead of your tax being calculated on $1 million, it will be calculated on I can't do math. What's $1 million minus 25%? It'll be calculated on 750,000.
Yeah, big difference.
Yeah, big difference. So you will save a good amount doing it that way, and it'll be taxed at 750,000. It'll still be taxed at 6%, but it'll be taxed at 6% of 750,000 instead of 6% of $1 million. And again, when I say 6% of, it's not really 6%. That's not.
Because there's so many different little calculations in there to come up with the
exactly. So it's the numbers are deceptive. The 4% and 6%. That's not really what how they're calculating it. There's lots of other things that go into it, but you're going to be calculated at the 6% rate of 750,000, not $1 million. So it doesn't,
And
and
that's
that's
why it's good for people that are coming into Charleston to work with not only agents that understand all this, can explain it to them, but also let their closing attorney know exactly what they're going to be doing with this property, how they plan to use it. Makes a big
That's
difference.
right. And just a note about the 25%, that's just a one-time filing. So once you file that, you continue to get those savings of the 25% off the top. And unless, of course, the use changes and you go down to 4% use. But until that, you will continue to get that 25% savings. Same thing with the 4% residency application. When you file that, you will always get that 4% rate as long as you don't go out and purchase another primary residence. And
Right.
if you do that, then they'll adjust your tax rate to 6%. But as long as you keep it, you just file it one time and you don't ever have to file again, you'll always get that 4%.
Well, that brings to another thing. Someone buys a house in Charleston, they are at the 6%, and then they decide to sell it. And because they're not a resident of South Carolina, at closing, you would have to collect the taxes on the sale of that property.
Yeah, so that's a big thing. And this goes back to your point about disclosing to your agent and your attorney the use for the property. That's really important. So what you're talking about, Lisa, is if you're coming in, you're out of state, you buy a property and then you go and sell it. You have to report your gain on the sale. And gain is a term that's defined by the IRS. It is not the sales price. It is not your net proceeds. It's more complicated than that. It takes into account closing costs. It takes into account, improvements you've done on the property, other money you've put into it. It takes into account a lot of things. We do not calculate someone's gain. That's something that needs to be done by a tax professional. And so if we do have, non-South Carolina residents selling property, we advise them that we do need to know their gain, but that to calculate that, they need to speak to a CPA or a tax attorney or something to calculate that. And if they are an individual seller, we have to withhold 7% of that reported gain at closing, remit that to the South Carolina Department of Revenue. If they are a corporation or a corporate entity, we have to withhold 5%. And report that to the South Carolina Department of Revenue. And that has to happen at closing. And there's an affidavit they have to sign to report their gain. But again, that is something that they need to talk to their tax professional about in order to accurately report that gain to us. Because a lot of times it's less than what people initially think. Once they start going into, the money they put into it and closing costs and improvements and that kind of thing. A lot of times.
And real estate, their realtor fees as well.
That's right.
Including that. That's why I tell everyone, because a lot of my clients do come and do renovations, keep up with everything that you're spending because of this right here. We just had a couple closings recently that you and I did together, and they discovered that they really didn't have a gain because of renovations and different things they had done. Another big one that gets missed all the time that I find out after I meet people again after they've bought, as we have a lot of people a lot of kids that come to school for College of Charleston, Trident, law school, MUSC, and a lot of parents get to looking at, after their child has been here for a little while, this is my foot into Charleston. Buy a house here, let my college student live in it. The other big thing, they'll rent a couple bedrooms out. You can get $1,000 to $1,500 a bedroom these days. Let their friends live there. But what they do not realize, they're normally going to be charged the 6% real estate tax. If they put that child on that deed, 25% share, they will get the 4% real estate tax.
That's exactly right. And that's why I mentioned that it's so important to disclose to your agent and your attorney why you're buying this property. Because what all of this information we're talking about, the 4% application, the primary residence, the withholding when you sell it, all of this information, the 25% if you're buying at 6%, continuing at 6%, this needs to know at the time of purchase. This needs to be known at the time of purchase. And so you're not surprised when you go to sell it. And so we can take certain steps to assist you in trying to prevent some of this money from having to be remitted at the sale. So that's one of the biggest things, is that if you are buying property for your student who's going to be here, and they're over the age of 18 or older, please let us know, because as long as it makes sense from a tax perspective, and again, we always tell people to talk to a tax professional, but as long as it makes sense from a tax perspective, we would certainly advise to add them to the deed, because they only have to hold a 25% interest to qualify for the primary residence savings. And it's a huge savings. I mean, you're saving thousands of dollars. And so if you just add them to the deed, that would save a lot of money. And the other thing, another consideration that I always tell people about who are doing this sort of thing is, if the student is planning to become a South Carolina resident, to live here and switch over everything, become a South Carolina resident, the parents may also want to think about, putting title only in the child's name, because when the child goes to sell, they would not be subject to the withholding. And that's another consideration, again, to know up front when they're buying, and just something to consider. And it's not right for everyone. That's certainly an independent situation, and it depends on the specific situation of the buyers. But that's just something that I think it needs to be understood by people who are buying, particularly for their students who are here, medical school students, people who are doing their residency here, who are planning to set up practice here afterwards. They're going to be residents. You may want to think about just putting them on the deed to avoid that withholding and to get the primary residence.
And it's another good way for parents to get their foot into the Charleston marketplace. They have a place, their child goes to school here, they rent some bedrooms out, which pretty much pays the mortgage or makes up for the cash that they put out front. And then they can either use that house themselves once the child finishes school, or sell it and upgrade or whatever they want to do.
That's right.
Another thing that, we do have some foreign buyers that come in. A lot of people from Europe love Charleston because it kind of reminds them of that atmosphere. So talk a little bit about when they buy here and what the differences are there.
So when you buy as a foreign person, there's no difference. You can buy as a foreign person, you're going to buy the same. There's no additional tax or anything that happens when you purchase. And as long as it's your primary residence, you don't own another primary residence, you will still qualify for the 4% residence exemption, as long as you can update your documentation. However, if you are not a U.S. citizen or you don't have permanent residency here, you are considered a foreign person, again, defined by the IRS, there will be withholding. That's IRS withholding, not South Carolina withholding. There may be South Carolina withholding on top of that as well, if you can't be deemed a South Carolina resident, but there would certainly be IRS withholding. And if the sales, and this is different than the South Carolina, it's calculated differently. It's not on the gain. The withholding is on the gross proceeds. And so if the sales price is under $1 million, it is 10% of the gross proceeds, not of the gain. So what you're getting back, 10% of that has to be withheld and remitted to the IRS. If the sales price is over $1 million, it's 15% of the gross proceeds has to be withheld and remitted to the IRS. And then it's up to the taxpayer to work with the IRS the following year to try to get that back or get some of that back. And so it's a large withholding when you sell it. And really, there are a few exemptions that can apply to people not having to pay that, but it's very rare. That's a real hard one to get around. If you're not a foreign person, it's pretty much across the board. You have to withhold that 10% if it's under $1 million, and then 15 if it's over $1 million. That's of the gross proceeds.
Is there anything else you want to add other than I think www.charlestoncounty.org is the website people can go to, and go down to auditor's office more, and then click real estate estimator, tax estimator. You just have to know your tax district you're going to be in, and you can play around the 4% and 6%.
Mm-hmm. Yeah, I think the one thing I would tell people is, if you are planning to occupy this property as a non-primary residence at a 6% rate, please understand what your taxes are going to be. Because if you're buying this house and you're looking at the listing and it's being occupied at a 4% rate, And the other thing that people need to understand is the way South Carolina calculates its taxes is really based on the sales price, on the last sales price. It'll go up a little bit every 5 years when they do the reassessment of the property, but it didn't change a whole lot. So this person has been living in the property since 1980, and they're living in a downtown historic property. Their taxes could be like $3,000 a year.
Yeah.
And again, this was based on the taxes on the sales price when they bought it in 1980, gone up a little bit every 5 years, but nothing like what they would be if you're buying it now for $2 million and you're living in
6%.
it as a second home. Yeah.
Yeah.
And so I've had this happen where, the realtor didn't tell the person that their tax, it didn't, and maybe didn't think about it, but that is a really, really important thing for people to understand is if you're looking at a listing and whatever the taxes show, you need to let your realtor know or call me, and I will help walk you through what your taxes will look like at a 6% rate, because at a $2 million house downtown, I mean, I'd have to do the calculation, but they could be $25,000. I mean, it's a high amount at 6%
There's a
rate.
big difference. That's, one of the questions I get asked a lot by clients and or other real estate agents when I have a listing. And this question, I think, is just a worthless question. What are the current taxes and what are the current utilities? And I'm like, why does that matter? Because they, as you said, I'm a perfect example. The house I live in downtown, what I paid for it and what my taxes are versus, and then it's gone up. It'll go up probably this year, 5 years. Compared to what the value is now, if I put it on the market, perfect example. So if you're asking that question, I just advise all my clients, look, let's just go to the calculator. I usually do it for them, and I do a screenshot of 4%, 6%. This is your taxes. Utilities, that's based on your usage. I mean, if you have a family and that's living there with 3 children, and it's just going to be a couple, big difference.
Yeah. And that's, I love that you do that up front, because I always do that at the closing table. I have a form that people sign, and it shows you what the difference is. But at that point, it's a little too late to do something about it. You're in. And so, when you are out looking, that is the perfect time to ask, what will my taxes look like as a primary residence also? Because again, they're going to change significantly, probably from what they are currently when you buy it, because the sales price has changed. And so even as a primary residence, they're going to change. And so using those tax estimator tools are critical, and doing it early before you put an offer in. So you understand, particularly if you're planning to live in it as an investment property or second home, because your taxes are going to be drastically different than what they may be now. And
I've had clients literally have planned that it's going to be a second home. And then when they find out what those taxes are, maybe they're already retired and they don't have to live in their other home because of work, or maybe they have a job that they can, do everything remotely. They decide right then, we're changing.
That's right.
We're changing the primary residence. We're changing everything because it's going to save so much money.
Exactly. And knowing that, and being able to have time to make those accommodations, if that's what you choose, I think is critical, and knowing it in advance. And so that would be my one real takeaway from this is communicate to your realtor, tell her why you are buying this property, what you're going to use it for, and look up those estimated taxes to understand what your taxes will be.
All right, I think we covered a lot of information. And again, as always, if you have topics that you want to hear more about, just let Jennifer and myself know, and we will get on those subjects. Jennifer, it's good to see you again, and hopefully we can see each other in person soon.
I hope so.
All right, talk to you soon. Bye.
Thank you.